Good day. Welcome to our Fixed Income Market Outlook Podcast Series 3. My name is Chang Ming, Head of Fixed Income Strategy at RHB Bank, Group Treasury and Global Markets. For today's podcast, we will be focusing on prospects of sustainable and responsible investment Sukuk, also referred to as SRI Sukuk. Given the current challenging macro backdrop, we believe issuances of SRI Sukuk promotes sustainable development goals as well as ethical investments, which offers safer investments as well as better shielded from disruptions caused by the current COVID-19 pandemic. Amid a more challenging global macro backdrop and looming external headwinds, issuers and investors are expected to shift towards SRI investments as this platform creates a more sustainable ecosystem which promotes resilience to external shocks. On that note, we opine Malaysia continues to provide good value proposition in terms of SRI Sukuk given its position as a market leader in Islamic finance as well as continued efforts to promote sustainable and ethical investments. As a global hub for Sukuk issuances, the depth of the ringgit bond market continues to grow further with a respectable outstanding size of ringgit 1.5 trillion. The current composition of the domestic bond market is relatively well balanced, with corporate bonds Sukuk comprising 47%, with the balance of 53% represented by government bonds Sukuk. In the green SRI Sukuk space, a total of 10 issuances with combined issue size of 4.3 billion of green SRI Sukuk issued, making up more than 90% of total SRI Sukuk issuances. This represents financing of total 482 megawatts of renewable energy projects in Malaysia, cumulative April 2020, and we expect more issuers to embrace this roadmap as collective efforts to reduce carbon emissions. Since the introduction of SRI Sukuk framework, a combined total of 13 SRI Sukuk issuances completed in Malaysia, with 7 SRI Sukuk issuances which are dually recognized under the ASEAN standards, cumulative April 2020. With investors steadily embracing SRI, promising growth prospects remain forthcoming given the attractive low interest rate environment. Year-to-date wise, Bank Negara Malaysia reduced the OPR by a collective 125 basis points in 2020 as preemptive efforts to support domestic growth amid increased downside risks to growth from the COVID-19 pandemic. We expect the central bank's dovish monetary policy stance to promote SRI Sukuk issuances as more investors are expected to place greater emphasis on investment strategies that echo sustainable development goals. Malaysia remains a global leader in terms of Islamic finance with the issuance of world's first green Sukuk in 2017. This marks Malaysia's global footprint in the green Sukuk space as Malaysia earned the World Bank's global standard as the market leader vis-a-vis other global capital markets, echoing the country's support to promote the United Nations Sustainable Development Goals initiative. The 17 SDG principles by the United Nations are as follows. Despite the recent revised outlook to negative by S&P for Malaysia's sovereign credit rating outlook, the ringgit bond market continues to stay resilient. In fact, foreign inflows returned to positive for a second consecutive month in June. Total foreign ownership of ringgit government bonds now stands at 22.2% in June. Total bond inflows came in at ringgit 11.5 billion for month of June. Foreign holdings of government bonds increased by ringgit 10.2 billion. Based on the latest foreign holdings data released by the central bank, further comfort is derived. The composition of foreign holders by investor category comprises mainly of real money investors. By investor category as a percentage of ownership, asset management companies, central banks, government as well as pension funds comprise of 38%, 33% and 17% respectively. In relation to the upcoming September FTSE Russell review pertaining to Week B index, we reaffirm our base case for Malaysia's continued inclusion in the mentioned index in the form of MGS. The recent strong participation from concluded MGI auctions with strong demand exceeding 2.5 times despite tender size worth 5 billion for both 3-year MGS and 10-year MGI reopenings auctions suggests domestic and global investors continue to have a positive view on ringgit bonds. Real yields are still attractive given the benign global and domestic inflation outlook. We hope this episode of our podcast has been useful. Thank you, and please continue to stay tuned to our upcoming podcast series in the coming months as we continue to share more updates in the fixed income space.